Okay, so now I'm going to show you how to use this calculator. Okay, a lot of the calculators are very in a similar fashion. They're very, very similar. Now, what I would personally recommend if you're having some money management issues in the beginning is to work with the dollar amount instead of the percentage amount. Okay, obviously make sure the dollar amount is not exceeding 2 or 3% of your total account. So if your account is, let's say, $100, just for example, if your account is $100 and your trade risk that you've calculated on how much you spend on per day basis happens to be $5, then $5 would equal to 5% of your account. You can't do that. It's too high. You want to lower your number. So don't increase your number, but always find a way to lower your number, stabilize, and once you stabilize and become consistent with your trading, that's when you want to look to starting to increase and starting to scale. We'll go into all of that, how to do that and when to increase, when to scale, all of that stuff further down into the chapters. But for the time being, I want you to get you geared up, prepared every piece of the way, inch by inch. So we've been learning for the whole first week and second week now is getting into your brain of why money management, right? Now we're going to start going to the tools and the hows and the strategies and the techniques, but all of this stuff, please don't brush off why these first 2 weeks are absolutely critical. It's almost like if you're in this hurry of, let me find a Forex strategy, and then I'm going to learn how to trade and I'm going to make all the money in the world. Trust me, it'll take longer if you go that route. It'll take way, way longer because you're going to have to circle back and come back to, wait, what am I missing here? How do I calm down? How do I control my psychology? Everything goes out of control after that, right? So instead of doing that, if you build your building blocks properly every step of the way, then what happens is you grow faster, you scale faster, and you become unstoppable because you're starting to think in a right way, and your results show you're going to be doing better no matter which avenue and turn you take in the market. Let's say you're doing Forex and then you want to jump into stocks. You will be able to handle it. And you're going from stocks, you want to jump into cryptos because that might be the new thing coming up. You will be able to handle it. It all comes down to whatever the product may be, stocks, cryptos, futures, currency. You need money management as a solid base to win, because any of these products goes onto the bottom line of why do you need to trade, of why are you looking to trade, is to make any money. And if you want to make any money, you want to follow and build your x-ray machine first before sitting down looking for opportunity and saying, I hope this opportunity makes me $1 million, and then if I do make it, I have to do it again. Can I do it again? I don't know. I'll keep trying it until it works. That's not the correct way of trading. Unfortunately, that's what a lot of people are doing. They'll take a trade, they'll get off the trade, and they're like, whoa, I made some money. And then they'll take a trade again. Oh, I lost some money. It's okay, let me try it again. They'll take the next trade. Oh, I made some money this time. Okay, take the next trade. Oh, I made some money this time. Oh, add more money. Then take the next trade. Oh, I lost. Oh, I lost big time. Oh man, something's wrong. Maybe I need to go onto Google and look for what's the next, how do I do this thing properly? You see this cycle, this vicious cycle? It's going to hunt you and haunt you over and over and over again until you don't fix the money management issue. This cycle will never end otherwise. You have to fix it once and for all. So before we begin, I want you to comment below this video and message that you are going to make a promise going forward that you're going to increase your awareness of money management and you're going to do what is necessary to fix this issue once and for all. Once and for all. Okay? Now, because it might not be an issue because you're too aggressive or you're too conservative, it could just be an issue of following it consistently also. Okay? So the pact happens today. Okay? I am not letting you go to the next video until you make that pact in the comments below that you are going to make the necessary changes that is required of you to make sure the year ahead is absolutely fantastic for you. Okay? Because it has nothing to do with trading per se. but it has to do with your money management x-ray that you need to put on top of each opportunity, and every trade is as if you are buying a new business, right? So if you're an investor or a businessman or businesswoman, you're looking to invest in something, whether it's a currency, a company, a future, a coin, whatever it may be, or gold or silver. You need to run through your money management criteria to say, this is good for me, this is not, but because trading is going on and on and on, I can come back another time and look at, oh, today is a lot better. It matches my money management criteria. This I can do, right? So you want to be good at that. You want to be good at that. Okay. So in terms of using this position size calculator, it is recommended to use your dollar amount first, okay, or euro amount, or whatever amount, wherever you're located in the country, around the world. You want to find out what is your number and put that number in here. So I'm going to give you, for this purposes, I'm going to give you an example. So let's say the account size is $20,000, okay, just for the sake of this example. And you found out your number is, well, my account is huge, $20,000, but I don't spend more than $100 in a day. That's in fact pushing it. I might spend like $60 a day. Okay, if I divide $60 a day by 3, I end up with $20, right? So if my number is $20, that's obviously a lot smaller than my 3%. That's fantastic. That's good. Don't need to raise the number to make it 3% or 2%. Keep it at $20. Psychologically, that's what works. If your number is higher than 3%, lower it. Lower it down. Okay? So your number is, let's say, $20, just again for the sake of this example. And you find out that you're trading Aussie Swiss franc. Okay? You're trading Aussie Swiss franc, and your stop loss in terms of pips is, I have a stop loss of 35 pips, okay? Because based on the technique you're trading, it might tell you to keep a stop loss of 35 pips, okay? So when you calculate that, it automatically tells you that your risk to reward percentage-wise is 0.1%, which is very good. It's very, very low, gives you a lot of chances and attempts to before you can do some serious damage to this if you're doing it incorrectly. So that's okay. You won't feel the pain so much. And the unit size is depending on how your broker deals with position size. When you open the trade, you cannot take more than 5,656 units when you open the trade. Okay, you want to keep it as exact as possible. Sometimes your broker will say, I can allow you 5,600 because I need the round number. Or some brokers might say, allow you 5,000 or 6,000. But not 5,656. Do whatever you can to get to the round number, whatever your broker allows you. Some brokers work on lot sizes. Now, for example, if you're on MetaTrader or MT4, MT5, they work on lot sizes. So this would be 5.7 micro lots, right? So this would be so it would be 0.05 micro lots. And you can play with this and find out what your broker is dealing with, whether it's dealing in units. Okay, I personally use units, so I can keep an exact measurement as much as possible. But if you're using lot sizes, that's also perfectly fine. Okay, remember, some brokers might have a minimum of 0.1 allocation. Okay, which means you can't go lower than that. In which case, you might need to look for a broker that suits your risk management criteria. Okay, you have to be careful of that. You have to be careful of that. So now, why is this calculator important? Because you can be like, oh, let me just write this number down, and that number is going to be my trade whenever I open a trade. I just need to open 0.057 every single time. No, it's not going to be like that every single time, because let's say tomorrow or your next trade, you're trading Euro USD. Okay? Just by changing the currency pair, your value changes. Where's my Euro USD? And here we go. And I click calculate. Okay, 0.057. Okay, let's go into pound USD. Okay, it's still the same. Okay, depending on what currency you're at, this number is going to change. But the more important piece is Let's say your strategy that you're trading tells you to put your stop loss below your recent low or above your recent high, depending on which side you're trading. That number can vary. Your stop loss can vary. So today your stop loss can equal 20 pips. And if you click calculate, look at that. The number has shifted. Another time you might be trading and the number might be 27 pips to be exact. And you calculate, that number has shifted. Now the reason to do this is if you have a loss in this trade with this lot size, your loss is going to equal that fixed number of $20. Even if your stop loss is 270 pips. Wow, that's a huge stop loss. Calculate. This is the size you can trade. It's very, very tiny. But if you have a loss for unforeseen reason, you don't lose more than $20. It's fixed at $20. That's what you want, because then when you look at your statement, you're like, okay, these are all my losses and they're all stable, 20, 20, 20, 20. These are all my winners. Oh, here I make $30 winners, $50 winners, $10, $5, $7, $5. When you see that $5, $7, $5, $10, $5, you're like, wait a minute. My losses are stable, but my profits are not. I'm exiting my profits way too early. This will help you identify where the problem is very quickly. But if one trade is so extravagant and the next trade you took it in the same exact style or strategy and that number doesn't match up to the previous trade, it's all over the place, you will never know on what you're doing right and what you're doing wrong, and you will never know if you can scale. Remember, the objective of trading is to be able to trade bigger. Okay? It is not to be able to say, I did 10 trades this month and all of them were good. No. The objective is to be, I did 10 trades this month, 7 were correct, good. I know what I'm doing right, I know what I'm doing wrong. Next month I'm going in bigger. Okay? Because I know where my strengths are and I need to play on my strengths. Okay? And again, in the later chapters, I'm going to show you about all the scaling and all that stuff. So, your homework for this week is to try at least 2 trades using this calculator this week, if you have a trade. If you don't have a trade, don't force it. But if you have some trades, and you might be doing more than 2, try to use every trade using this calculator. Get in the habit of using a calculator. Okay, so that's step number 1, your homework number 1. Your other thing is to make sure you reduce your leverage. Okay, you reduce your leverage. You want to go, contact your broker or log into the back end of your broker and find out what paperwork do you need to file to reduce your leverage. The lower the better. The lower the better. Okay, so I personally have 50:1 as a maximum leverage, and I don't even use that. Okay, I try to keep it as low as possible. But I like to know that there's that threshold if needed, because sometimes I take multiple trades, okay? So that buffer helps me. But I don't want a buffer of 200:1 or 300:1, because in a day when you're trading well, you're in your element, you're okay. But in a day when you're trading bad, the element of control starts to drop. Your ability to be in charge of your trades goes down. And when that goes down, isn't it nice to know that the technology that you're using from your broker automatically controls how crazy you can go? It automatically caps it and says, no more. You can't do more than this. This will limit your risks, and it will give you the ability to calm down without doing much damage. Okay? So you want to be aware of these things. The goal is to survive as long as possible by giving yourself the ability to trade and trade and trade and trade and not lose it all in thinking, I hope this trade is the best because I'm putting half my account size on this trade. That's ridiculous. That is absolutely ridiculous, right? So I hope you understand everything. And the third most important thing is be sure to comment below the video to let me know that you are making a pact, a promise today to me, and more importantly to yourself, that you're going to do the changes required. You're going to master money management, and start to make the changes required. Because going forward into next week onwards, we're going into techniques, tips and tricks, strategies, and more information like that. But this first 2 weeks is really gearing up, preparing your mind for it. So don't be afraid to let me know in the comments below that you are ready to make this change. If you are unable to even say that in the comments because you might be shy or something, then say it out loud behind your computer screen that you are going to do what it takes. You wake up in the morning, you want to remind yourself you're going to do what it takes. Because trust me, it is not the trading techniques per se. It has a lot in your entire life. Whatever you might do in your life, money management is the number one key that's going to get you ahead in life to make sure you have more money in the bank than you did before. Okay? Because every opportunity that comes your way, you gotta scan it. You gotta scan it. And as you become really good at that, you will know when an opportunity is good, and you will know how to make more money from an opportunity that you know is valid. Okay? Not based on emotions of, oh, this sounds like a good opportunity. This company is selling wires. Who doesn't like wires? Everybody's going to love wires. Oh, look, that person is using a wire. That person is using a wire. Let me invest in this stock because everyone's using this wire. That's emotion-based trading. Okay? It has no merit, no value in real life. Okay? What you need to do is look at the numbers, and that's one side of things. You want to look at the opportunity and make sure the opportunity is good, obviously, but then you want to take your own X-ray machine and run it on top. All the failed traders that I've seen in my life have ways to find opportunities, but they don't have their own X-ray machine. It's as if they're just constantly looking for opportunities. Where can I make money? I can make money here. Where else can I make money? I can make money here. They're just looking for so much opportunities without knowing, hey, am I actually gonna win? And if I win, can I do this again? Can I do it bigger? And can I do it more intelligently? That's what money management does for you. Okay? So I look forward to seeing you guys next week. Again, I will look forward to reading each one of your comments below this video. Until next week. Cheers, guys.